All right, so welcome to the deep dive, everybody, where we really try to dig into these earnings calls. These companies put out these really long and dense earnings calls, and we try to figure out what is the stuff that really matters, the stuff that's going to move the stock, the stuff that's going to affect you if you're, thinking about investing in this company. And today we are diving into Dollar Tree's Q4 2024 earnings call.
Yeah.
Buckle up.
Yeah, this is a big one.
Yeah, because there was a major development.
Big development.
Dollar Tree is selling its Family Dollar business.
Yep.
So we're going to break down what that means, how their core Dollar Tree stores are performing, and, just their plans for the future.
Yeah, exactly. And this earnings call wasn't just about the past quarter. It was signaling a pretty significant strategic shift for this company.
For sure.
The decision to offload Family Dollar has understandably generated a lot of discussion.
Yeah.
And, we're here to kind of give you the distilled version of what was said and, more importantly, what it might mean.
Yeah. And so let's just get straight to it.
Let's jump into
the headline numbers.
Headline numbers.
The big one, as we said.
The big one.
Family Dollar sale.
Huge.
Can you give us a quick rundown of how that went down? What are the numbers?
Sure. So Dollar Tree reached an agreement to sell the Family Dollar business to Brigade Capital.
Okay.
For just over $1 billion.
Okay.
And so this move comes after the company kind of reassessed their strategic priorities.
Right.
And concluded that the two banners operate with limited synergy.
Right. So they're kind of they're both discount retailers, but they have pretty different strategies in different target markets.
Yeah, exactly. And there's only so much overlap and so much that you can gain from having them under the same umbrella.
Gotcha. So Family Dollar is heading to a new owner.
Huh.
What about the performance of the Dollar Tree stores themselves in the fourth quarter?
Right. So for the 3 months ending in Q4 2024, Dollar Tree saw a 2% increase in comparable store sales. Now, think of that as kind of a measure of sales performance in stores open for at least a year. So you're comparing apples to apples.
Right. Year over year.
Exactly. Year over year. Same store sales, essentially.
Gotcha.
And this increase was driven by a 0.7% rise in the number of transactions, so people coming into the stores.
Okay.
And a 1.3% increase in the average amount they spent per visit.
Okay.
What's particularly interesting is that the growth in that average ticket, that average spend per customer, outpaced the growth in traffic for the first time in over 2 years.
That's a notable shift. Does that suggest that people are buying more when they do come in?
Yeah.
Or are the multi-price points starting to really influence that average spend?
It's likely a bit of both.
Okay.
Customers might be adding more items to their basket.
Right.
And with Dollar Tree increasingly offering items at price points above the traditional dollar, that average spend is naturally going to creep up.
Makes sense. And how did different parts of their business perform? Were some categories stronger than others?
Yeah. So they're consumable goods. Things like, your food, your health and beauty items, cleaning supplies, saw a pretty strong 4.2% jump in comparable sales.
Wow. Okay.
Perhaps even more encouraging was the performance of their discretionary items. So this is your toys, your home decor, seasonal goods.
Yeah, more of the fun stuff.
The fun stuff.
Yeah.
Exactly. And that category saw a positive comparable sales reading of 0.4% for the first time in a year.
Interesting.
Suggesting a potential turnaround in that part of the business.
Okay, so it looks like that multi-price strategy that we've talked about before might be helping to boost those discretionary sales.
Right.
What about the overall sales figures for the company?
So net sales from their continuing operations, which now focuses solely on the Dollar Tree banner and their corporate functions,
Right, no more Family Dollar in the mix.
Exactly, increased by 0.7% to $5 billion.
Okay.
Now, it's worth keeping in mind that the fourth quarter of the previous year had an extra week. So even with that headwind, they still managed to eke out some growth.
Okay, so they're still growing even with that tough comp.
Exactly.
Okay, and what about the bottom line? How do they do in terms of profit?
So adjusted earnings per share from continuing operations came in at $2.11.
Okay.
Looking ahead to the current fiscal year, 2025, they've given a sales projection of between $18.5 billion and $19.1 billion, with an anticipated comparable store sales growth of 3% to 5%.
So that 3 to 5% lift in comparable sales sounds pretty optimistic.
It is. Yeah.
What's fueling that confidence?
I think a lot of it ties back to that continued rollout and success of their multi-price strategy.
Okay.
Ongoing efforts to improve their existing stores and the addition of new locations, including some that were formerly operated by 99-cents only stores.
Gotcha.
They also expect their adjusted earnings per share to land somewhere in the range of $5.50 for the full fiscal year.
Okay, so that's a solid overview of the key numbers.
Yeah, we covered the high-level stuff.
Yeah, now let's really dig into the detail.
Let's get into the nitty-gritty.
Starting with the headline grabber.
The big one.
The sale of Family Dollar.
Right.
It's the deeper thinking behind this move.
Yeah, so from management's perspective, selling Family Dollar was really the outcome of like a thorough evaluation of their strategic options.
Okay.
You know, they looked at all the different angles.
Mm-hmm.
Their conclusion was that the two business models have inherent limitations in terms of how much they can synergize. They operate quite differently and cater to slightly different customer bases.
Right. It's not as easy as just saying, okay, well, now we have like way more scale and we can negotiate with our suppliers better. And
Right. There are some benefits there.
yeah.
But at the end of the day, they cater to like, you know, Family Dollar is more of like a fill-in trip.
Okay.
Dollar Tree is more of like a treasure hunt experience.
Right.
And so by separating them, the idea is that dedicated management teams can really hyper-focus on the specific needs and opportunities for each banner.
Makes sense. Trying to serve two distinct markets under one corporate umbrella can certainly dilute focus. What are the key financial aspects of this sale?
So Dollar Tree is set to receive just over $800 million in cash.
Yep.
Once the deal closes, which they anticipate happening within the next 90 days or so.
Right.
It's also interesting to note that Family Dollar will retain its headquarters in Chesapeake, Virginia,
Okay.
even under new ownership.
So a change of ownership, but not necessarily a massive operational upheaval in terms of location. What are the main benefits that Dollar Tree anticipates as a result of becoming like a more streamlined single banner operation?
Right. So the primary anticipated benefit is that the management team can now channel all their energy and resources into the core Dollar Tree business.
Okay.
This singular focus, they believe, will accelerate sales growth, boost profitability, and ultimately drive better returns for their investors.
Right.
Plus, there's the argument that a more focused business might be valued more favorably by the market.
Right. If you're like a very specific, easy to understand business, that can often lead to like a higher valuation.
Exactly.
Interesting. Okay. Let's pivot now to this multi-price strategy, which seems to be a recurring theme.
A recurring theme.
How is that initiative progressing?
So the expansion of their multi-price assortment continues to show positive results,
Okay.
particularly when it comes to seasonal and holiday merchandise.
Okay.
The company highlighted like a really strong sell-through of these items during the recent holiday period.
Mm-hmm. And they've been talking about these 3.0 format stores.
3.0, yeah.
What distinguishes them from the older store models?
So the 3.0 format stores are essentially their most evolved model.
Okay.
These are either brand new stores or existing locations that have been converted
Okay.
to feature the full expanded multi-price assortment across the entire store.
Okay.
And they also incorporate other enhancements aimed at improving the overall shopping experience for customers.
Okay. So it's not just about the multi-price. It's also like a general refresh of the store.
Exactly. It's like a better layout,
Okay.
better signage, trying to improve that treasure hunt experience.
Yeah. Gotcha. And how do these 3.0 stores perform compared to the more traditional Dollar Tree locations?
So in the fourth quarter, the inline 3.0 format stores demonstrated a very significant 220 basis point.
Okay.
That's 2.2 percentage points.
Okay.
Increase in comparable sales compared to their other store formats, which include stores with a more limited multi-price selection.
Okay.
What really stood out was the discretionary category within these 3.0 stores, which saw a remarkable 290 basis point lift.
Wow, that's a huge difference, especially in those higher margin discretionary items. What about foot traffic and the average spend in these 3.0 stores?
So they also saw a modest 20 basis point increase in customer traffic.
Okay.
But perhaps more importantly, the average transaction value of the amount people spent was 200 basis points higher in the 3.0 stores compared to the other formats.
Wow, so people are coming in and they're like, oh.
Yeah, they're spending more.
Okay.
This really underscores the impact of having that broader price range and product selection.
Yeah, it makes a lot of sense. It certainly sounds like the 3.0 format is a key growth engine for them. What are their plans for expanding this format further?
So their goal is to have approximately 5,200 3.0 format stores by the end of 2025.
Okay.
This includes converting around 2,000 existing stores to this format and opening another 300 new 3.0 format locations.
Okay, so they're going to be busy.
They are very busy.
All right. So a clear focus on this multi-price approach and those enhanced store formats. Now, the earnings call also touched on like broader consumer trends.
Yeah.
What are they seeing in terms of how people are shopping? Are they seeing people like, trade down? Are they seeing people be more cautious with their spending? Like, what are they seeing out there?
Yeah, so they're observing like a really strong inclination towards value among consumers across all income levels.
Interesting.
And this isn't just about lower income shoppers tightening their belts.
Right.
They specifically pointed out that middle income consumers, who constitute roughly half of their customer base,
Wow. Okay.
are increasingly prioritizing value.
That's an interesting dynamic because we often associate deep discount stores primarily with like lower income demographics.
Exactly. And they also noted increased traction with higher income customers.
Wow.
Who are now viewing Dollar Tree as a viable and cost-effective source for a wider variety of goods.
Interesting. So it's like almost becoming cool to shop at Dollar Tree.
Yeah. And I think that's part of their strategy, right? To make it more of a treasure hunt experience.
Right.
And less about just like rock bottom prices.
Yeah.
And so this trade-in behavior, as they termed it, for various income segments, is helping to cushion them against some of the broader economic headwinds.
So they're kind of like almost insulated a little bit from like, if the economy really weakens because they have people from all these different walks of life shopping in their stores.
Yeah.
Interesting. Globally, tariffs and supply chain issues have been, a persistent challenge for retailers for the past few years.
Sure.
What insights did they offer on this front? Like, how are they thinking about these issues and how are they trying to mitigate them?
So Dollar Tree highlighted their long-standing experience in navigating the complexities of global trade.
Mm-hmm.
They've been doing this for a long time.
They've been dealing with it, yeah.
They have a multifaceted strategy to mitigate the impact of higher tariffs.
Okay.
Which includes negotiating better terms with their suppliers, making adjustments to product specifications, discontinuing items that are no longer economically viable,
right,
exploring alternative sourcing locations, and leveraging the flexibility that their multi-price model provides.
Right. So they can kind of absorb some of those price increases by just bumping up the price a little bit more.
Exactly.
Interesting. Okay. It sounds like they're trying to be proactive in managing these external pressures. What about the specific tariffs that have been in the news recently?
So regarding the 10% tariff on goods imported from China that was announced in February, Dollar Tree estimates a pre-mitigation impact of around $15 million to $20 million per month.
Okay.
However, they stated that they've already managed to offset over 90% of this increased cost through their various mitigation strategies.
Wow, that's great.
Yeah, and this offset is already factored into their financial outlook for 2025.
That's a significant offset, but there's been talk of even more potential tariffs, hasn't there?
Yeah, unfortunately. Yeah, concerning the additional tariffs proposed in March, another potential 10% on Chinese goods, and a 25% tariff on goods from Canada and Mexico. Their preliminary estimate of pre-mitigation exposure is approximately $20 million per month.
Okay.
Due to the uncertainty surrounding these proposed tariffs, their potential impact is not yet reflected in their financial guidance for 2025.
So that remains like a potential headwind on the horizon. How are they addressing potential disruptions within their supply chain itself? Like, are they thinking about like nearshoring or like, trying to diversify their supplier base, or what are they doing?
Yeah, so they announced plans to establish a new Dollar Tree distribution center in Odessa, Texas.
Okay.
And this will be done by converting an existing underutilized Family Dollar facility.
Okay.
And so the goal here is to alleviate some of the current pressures on their distribution network and to better support their growing number of stores.
Okay, so more capacity to kind of move goods around the country.
Exactly, yeah.
Gotcha. All right, let's delve a bit deeper into their overall financial performance and what they anticipate for the rest of the year.
Yeah.
We touched on some of the key figures earlier, but can you provide some more context around their profitability in the fourth quarter?
Sure. So in Q4, their adjusted operating income from continuing operations saw a 15% decrease.
Okay.
And their adjusted operating margin also contracted.
Okay.
This was primarily driven by a decline in their gross profit margin.
Okay.
And an increase in their selling, general, and administrative expenses, often referred to as SG&A.
Right. The cost of just basically running the business.
Exactly. Yeah.
Okay. What were the main factors that contributed to that lower gross profit margin?
Yeah. So the squeeze on gross margin was largely due to what they call a loss of sales leverage.
Oh.
Essentially, their costs didn't decrease as much as their sales growth might have warranted.
Right. They weren't able to get as much efficiency out of like the sales growth as they had hoped.
Exactly.
Gotcha.
They also saw lower initial markups on some products,
Okay.
increased losses from inventory shrinkage.
Right. So more theft and damage and things like that.
Yeah, exactly.
Okay.
Higher costs associated with distribution and more markdowns on merchandise.
Okay.
These were partially offset by lower freight costs.
Okay.
It's also worth noting that their Q4 cost of sales included a $25 million charge related to anti-dumping duties.
Okay. So some one-time things in there as well.
Exactly.
And what about the increase in their SG&A expenses?
So the rise in their SG&A rate was mainly attributable to higher depreciation expenses,
Okay.
increased utility costs,
Right.
and again, that loss of sales leverage. This was partially counteracted by lower adjustments related to general liability claims.
Gotcha. Okay. So looking ahead to fiscal year 2025, what are the key drivers they expect to fuel their revenue growth?
So they anticipate strong top-line growth stemming from the continued expansion of their multi-price offerings,
Okay.
ongoing enhancements to their existing store base,
Mm-hmm.
the addition of new stores, including those former 99-cents only locations,
Right.
and the continued ramp-up of sales in their recently opened stores.
Okay. So a lot of different levers they can pull to kind of boost that top line revenue.
Exactly, yeah.
What are their expectations for their gross profit margin in the coming year? Are they expecting that to rebound at all?
Yeah, so they are forecasting a modest improvement in their gross margin for 2025.
Okay.
This expectation is based on the anticipated benefits of their tariff mitigation efforts
Okay.
and potential improvements in initial markups, a reduction in markdowns, and favorable freight costs.
Mm-hmm.
Although these gains can be partially offset by increased distribution expenses.
Right. So some puts and takes there, but generally they're expecting things to get a little bit better.
Yeah.
A little bit better. Okay. And what about their SG&A expenses for the Dollar Tree segment specifically? Are they expecting to be able to control costs a little bit better in the coming year?
Yeah, so for the Dollar Tree segment, they anticipate a slight increase in their adjusted SG&A rate in the range of about 50 to 80 basis points for 2025.
Okay.
This expected deleverage is due to several factors, including higher store payroll costs related to increased staffing hours and minimum wage increases in some states,
Mm-hmm.
higher management incentive compensation,
Okay.
increased depreciation and amortization expenses,
Mm-hmm.
and greater spending on store repairs and maintenance as they work to elevate those store standards.
Okay. So while revenue is expected to grow, they're also anticipating some cost pressures impacting profitability.
Right.
What about the SG&A expenses at the corporate level?
So at the corporate level, they're projecting a roughly 20% increase in adjusted SG&A for 2025. The primary drivers here are investments in their information technology infrastructure
Okay.
as they transition more systems to cloud-based platforms,
Mm-hmm.
as well as higher payroll costs due to merit-based increases and incentive compensation.
So some investments in the business,
Yeah,
which hopefully will pay off down the road.
exactly.
The sale of Family Dollar will undoubtedly have some transitional effects on their financials.
Right.
How will that impact their performance in 2025?
So they have established a transition services agreement, or TSA, with the new owners of Family Dollar.
Okay.
Under this agreement, Dollar Tree will provide certain services to Family Dollar for a period.
Okay.
This is expected to generate approximately $95 million in income for Dollar Tree in the latter half of 2025.
Okay.
However, because they will still be incurring the full year of shared service costs before receiving these TSA payments, it's projected to have a net negative impact on their adjusted earnings per share in 2025
Interesting.
by about 30 to 35 cents. Now, on a more normalized basis, if they had received these TSA payments for the entire year, their EPS would have been higher.
Okay, so it's kind of like a timing issue.
Yeah, it's a little bit of a timing issue.
Okay, gotcha. What are their plans for capital expenditures in the coming year?
They anticipate capital expenditures in the range of $1.2 billion to $1.3 billion for 2025.
Okay.
A significant portion of this will be allocated to the opening of approximately 400 new Dollar Tree stores.
All right, so it's still spending a lot of money to grow the business.
Yeah.
And what's their current cash position, and what are their plans for returning capital to shareholders?
So they ended 2024 with a healthy $1.3 billion in cash.
Okay.
On top of that, they expect to receive around $800 million in net proceeds from the sale of Family Dollar,
Okay.
as well as an estimated $350 million cash flow benefit from tax losses associated with the sale.
Wow. Okay, so they're going to have a lot of cash coming in the door.
Yeah, they're going to be flush with cash.
Okay. And are they planning to do anything with that?
So they also indicated that they are likely to resume share repurchases during 2025.
Okay.
Additionally, they anticipate undertaking a new debt offering
Okay.
following an upcoming debt maturity in May and the completion of the Family Dollar transaction.
Gotcha. Okay, so they're going to be busy on the financing front as well.
Yeah.
Finally, what specific guidance did they provide for the first quarter of 2025?
So for the first quarter, they're projecting net sales to be in the range of $4.5 billion to $4.6 billion,
Okay.
with comparable net sales growth of 3% to 5%.
Okay, so pretty similar to the full year guidance.
Yeah.
Okay, and what about earnings?
They expect adjusted diluted earnings per share to be between $1.10 and $1.25.
Okay, great. Well, we've covered a lot of ground on the results and their outlook.
For sure.
Now it's time for our This Is Not Financial Advice segment,
Everyone's favorite.
where we take some of the information we've gleaned and brainstorm a potentially interesting, albeit outrageous but plausible trade idea. What's your thinking this time?
Okay, so given the significant strategic decision to divest Family Dollar and the renewed and intensified focus on the core Dollar Tree banner, particularly its evolving multi-price strategy,
Right.
a potentially compelling, though certainly speculative trade idea could be to establish a long position in Dollar Tree. So buy Dollar Tree stock, DLTR ticker symbol,
Okay.
while simultaneously taking a short position in a major discount retailer that primarily caters to the lower income demographic.
Interest. Okay, walk us through the rationale behind that.
Sure. So the core logic here is that by shedding Family Dollar, Dollar Tree can fully commit to and capitalize on its multi-price strategy, which appears to be resonating with a broader customer base,
Okay.
including more middle and even higher income shoppers seeking value.
Yeah, right. So they're not just competing on price anymore. They're competing on like value and a broader selection.
Exactly. And this could give Dollar Tree a distinct competitive advantage over retailers whose primary focus remains solely on the most price-sensitive consumers,
Right.
especially in the current economic climate, where value is becoming increasingly important across all income spectra.
Right. Everyone's feeling the pinch.
Exactly.
Yeah.
Furthermore, the substantial influx of cash from the Family Dollar sale provides Dollar Tree with significant capital for reinvestment in its core business and for potential share repurchases, which could act as catalysts for boosting shareholder value.
Okay, so it's essentially a bet that Dollar Tree's strategic pivot will enable it to outperform competitors that are more narrowly focused on the lower end of the income spectrum. What are some of the key risks associated with this type of trade?
Yeah, so the success of this trade hinges on Dollar Tree's ability to effectively execute its standalone strategy
Okay.
and to successfully navigate ongoing challenges like tariffs and supply chain complexities.
Right.
If their multi-price strategy doesn't continue to gain traction with that broader consumer base as anticipated,
Yeah.
or if new or escalating tariffs significantly erode their profit margins despite their mitigation efforts, the long position in Dollar Tree could underperform. Conversely, the short position in a competitor focused on the lower income consumer could face challenges if that demographic proves more resilient than expected, or if that competitor effectively adapts to the evolving economic landscape.
Right. So there's a lot of moving pieces here.
Exactly. This is a nuanced trade with several moving pieces, hence the outrageous but plausible label.
Absolutely. And a crucial reminder to our listeners, this is purely a hypothetical discussion and should not be taken as financial advice.
Precisely.
Always conduct your own thorough due diligence before making any investment decisions.
For sure.
All right, well, that brings us to the end of our deep dive into the Dollar Tree Q4 2024 earnings call.
Wow. That was a lot.
I know, right? We unpacked a lot. We've unpacked the key financial results,
Okay.
the major strategic shift involving the sale of Family Dollar, the continued evolution and apparent success of their multi-price strategy, and their outlook for the remainder of the fiscal year.
Busy times.
Busy times at Dollar Tree. The transformation underway at Dollar Tree is certainly noteworthy, and their intensified focus on the core Dollar Tree banner does indeed present some compelling possibilities for the future.
Yeah, I'm interested to see how this all plays out.
Yeah, me too. We sincerely hope this analysis has provided you with a clearer and more concise understanding of the critical takeaways from this important earnings call.
Absolutely.
What are your key insights from Dollar Tree's strategic moves?
Yeah, what do you think is going to happen?
Do you see the sale of Family Dollar as the catalyst for renewed growth and profitability for the core Dollar Tree business?
Yeah, we'd be interested to hear your thoughts.
Yeah, jump into the comments, let us know what you think, and until next time, thanks for tuning in to the Deep Dive.
See you later.
We'll be back soon with another insightful exploration into the world of earnings calls.
Always fun.
Always a blast.
See ya.